Stablecoins are the talk of the town right now. They're everywhere. Big banks are rolling them out, major companies are exploring them, and even corporations are jumping on the trend. We've been chatting about stablecoins for a while now, especially with projects like ROUSD, and it's easy to see why. They're making waves, especially as regulatory clarity around them grows in the US. But here's the thing, stablecoins aren't the only game in town. Standard Chartered, a Ripple partner, recently pointed out that while stablecoins are leading the charge in RWA tokenization, their reign might not last forever. They believe the next big opportunities on chain could be in private equity and commodities as regulations start paving the way. Lately, I've been really focused on just how massive tokenization is going to be once all the guardrails are in place and the big players no longer have to worry about regulatory hurdles. The potential here is huge. We just saw a big example of this, a $75 million oil and gas facility in Latin America was acquired and fully tokenized. This entire deal happened on chain, facilitated by stablecoins on a global settlements platform. How cool is that? Tokenizing $75 million of oil and gas is no small thing, and it's a sign of where this trend is heading. We're starting to see some pretty exciting, less common use cases emerge. While real estate, commodities, and stocks have been the usual suspects for tokenization, this shows how industries like energy can also jump in. Stablecoins, of course, remain a key part of the equation. We're starting to see some big moves in tokenization, and it's an exciting shift. Recently, American Banker interviewed Marcus Impegger from Ripple, who shared some great insights. Blockchain-based tokenized financial products are making their way into asset classes like private credit and commercial real estate. Marcus emphasized that American banks need to step up and lead before global competitors take control. Here's what Marcus had to say. I believe tokenization can be a turning point for financial institutions. Real assets like bonds and private credit are now moving on chain, and this could be a game changer for the industry. This isn't just speculation. It's about using public blockchain technology to make settlements faster and open up markets to more people. And the shift is already happening. What's really exciting is seeing institutions jump in. Take JP Morgan, for example. They just launched a tokenized deposit token. That's a big deal. It's a sign of what's coming next. Every major bank following suit with their own deposit tokens. But it won't stop there. Pretty much everything we know today could eventually be tokenized. We're at a pivotal moment for tokenization, a moment where it's worth paying attention to key networks and how they're shaping this future. I really think the XRP ledger deserves more attention right now, especially with all the exciting developments around tokenization happening on it. Just look at places like Dubai or even the US. Big moves are being made. Plus, there's some great insight from Subjective Views highlighting key points shared by Sandy Call, head of digital assets at Franklin Templeton. What we're witnessing is the next big step in the evolution of financial market infrastructure. Exactly. When you really think about it, everything in finance is evolving right now. Let me back up for a second. Look at what's happening on chain. Sure, real estate is moving on chain, but it's not just that. Bonds, private credit, everything is shifting. We already have fiat currencies on chain. This is the future of finance. Finance as a whole is making the move. And you know what? Sandy is totally spot on here, but wait, there's more. Check this out.
Why is it so important? Is because what we're looking at is a transition that's happening in the way that our economy works, right? We have been in a account-based economy pretty much our entire lives, right? Banks, you have a checking account, you have a savings account, you might have a brokerage account, you might have a retirement account. These are all separate accounts. And each of these accounts is kept on its own ledger by whatever organization you hold it with, the bank, the brokerage firm. It's all very fragmented. We're moving away from that, Scott, to a wallet-based system. And that wallet-based system is one where all your assets sit in your cryptographically protected wallet. And if we want to move cash around in that system, that is the role that stablecoins are playing. It's bringing the fiat currency out of today's traditional banking system or brokerage networks, and it's moving it into this wallet-based ecosystem, which is where the crypto blockchains exist, where the cryptocurrencies exist, and this is why stablecoins are so important. They're both the on and off ramp, but more importantly, they've really become the liquidity vehicle to keep assets in this wallet-based system.
Matt Hogan gave me almost the exact same answer yesterday from Bitwise. Similar, he said, I don't think people are ready for the fact that everybody is going to have a wallet, and this is the way that we're going to interact. And hearing you say it really reconfirms that. And then I made the point, it's not just a crypto wallet. there's also going to be tokenized everything. So it's likely where you're going to also trade your stocks and manage your portfolio and take loans and earn yield. I mean, is that the future where we can literally get all financial instruments into one wallet and it will be effectively blockchain will be the underlying technology of that?
100%. I mean, this is exactly where I think we're headed. And it's going to happen a lot faster than people anticipate, right? I mean, this isn't going to be a 10 or 20-year transition. I think that we're going to see more progress in the next 5 years than we've really seen in the last 50 in terms of reconfiguring the way that the financial markets work. The last time we had a period like this in our history was when they had the paper crisis in the late 1960s, and they actually then invented the whole system that we've been using for the last 50 years, using the leading technology of that day, which was the computing technology, right? And so that's what allowed us to immobilize and dematerialize securities. That's what allowed for the creation of these centralized clearing utilities that we see, like the depository trust company. And that's what led to today's account-based system. So what we're really seeing is the next iteration and the next evolution of the financial market infrastructure.
Its depository trust company, the DTCC, is very publicly testing blockchain technology.
Right.
They're doing it right out in the open, effectively, I think, trying not to become the next Blockbuster or Kodak or Sears Roebuck, basically disrupting themselves before they get disrupted by the industry.
She's absolutely right, isn't she? Things are moving way faster than anyone expects. She mentioned that in the next 5 years, we're going to see changes that are bigger than anything we've seen in decades. Imagine that. What used to take 50 years of growth will now happen in just 5. That's how fast everything is accelerating, especially in this market and the world of finance as a whole. Here's the thing. Every financial asset, anything of value, is going to be on chain. It's already happening. The DTCC, for example, is making big moves. They recently hit $100 trillion in assets under management and move over $3 quadrillion annually. And guess what? They're actively testing blockchain and diving into tokenization use cases. It's wild to think about, but so many people don't realize how much is already happening behind the scenes. If you take a moment to think about it, you'll quickly see what's coming in the next few months and even the next few years. We're about to see a wave of money flowing on chain, and some major announcements are on the horizon. Oh, and remember this post? I won't play the video here. It's about 2 minutes long, and I'm guessing most of you have already seen it by now. But here's the takeaway. Bitcoin may feel like the biggest thing right now, but it's really just a distraction from the massive disruption heading for the financial services industry. Here's what Franklin Templeton's CEO, Jenny Johnson, shared with us. When we look at what's happening in the blockchain space, a lot of the developments Franklin Templeton is focusing on aren't tied to Bitcoin or even Ethereum. They're happening on other public blockchains. And here's the exciting part. There's currently about $23.4 billion on chain right now, but we're aiming to 100x that. Sounds ambitious, right? So why am I so confident? Let me explain. On June 17th, JP Morgan met with the SEC Crypto Task Force to talk about crypto regulation and a potential shift of capital markets moving on chain. And get this, there's even more buzz coming from Nate Drolsey's insights, which makes it clear just how big this could be. He just shared a post outlining the agenda and participants. And guess what? JP Morgan met with the Crypto Task Force today. And one of the big topics, they're looking into the potential impact of capital markets activity moving to public blockchains. Take a moment to let that sink in. It's huge. Imagine this. Traditional financial markets transitioning to public blockchains. It sounds like a massive shift, right? And it can happen almost instantly once we get the regulatory green light. Now, sure, we're not going to see all the money move on chain overnight, but this migration will kick off fast. Piece by piece, we're going to see traditional finance start making its way into the blockchain space. We're starting to see some of the biggest names in finance embracing blockchain and moving on chain. Why? Because they're finally accepting what we've known all along. Blockchain is here to stay. This is one of the biggest technological revolutions in history. And guess what? Most of them are already in the game. What's even wilder is seeing big names like JP Morgan openly recognizing that crypto networks are the future of value transfer. They've been testing and using this technology for years, and now they're admitting it loud and clear. Pretty exciting, right? Take a look.
When you think about the effect for the industry, what does that signal beyond Bitcoin? Does it give more credence in terms of the path and trajectory for, say, Ethereum?
Absolutely. I think, with sort of these, obviously with the regulation, but also with these big institutions that are saying, okay, we're going to put we're putting our hat in the ring. I think what it means is that the industry understands that this is the future, right? And, for a long time, proponents in the crypto space have sort of, evangelized the sort of benefits of sort of blockchain and sort of digital currencies. I think now the institutions understand that this is where the path is going, right? And so for the JP Morgans and other big institutions, I think now they're sort of saying, look, we need to get a part of the program, and it doesn't surprise us, right? We at Wave have been meeting with many institutions that are trying to find their path in digital assets and how to sort of strategize. And I think, in 5 to 10 years, basically, majority of institutions will be using crypto rails or sort of digital ledgers to sort of help do better efficiencies of their processes and transmission of capital and utility.
Almost every institutional player is going to be on chain soon. It's just a matter of time. Give it a few months, maybe a couple of years, and you'll see all the banks moving on chain too. Oh, and let's not forget the $24 billion already on chain. That's the current total value of real world assets, RWAs, on the blockchain. But here's the crazy part. The total addressable market is valued in the quadrillions. We're barely scratching the surface right now. Even hardcore crypto holders don't fully grasp how massive this space is going to be. The big picture here, trillions will flow on chain soon, and they won't just sit idle. Think about what happened with Bitcoin. It started from pennies and skyrocketed to $100,000 because of the network effect. Imagine what these utility networks could achieve. Now multiply that by 10x, 100x, or even more. We're talking about trillions of dollars being traded around the clock every single day of the year. Everything from real estate to debt will be tokenized, and even money itself will live on the blockchain. Stablecoins are the clearest sign of what's coming next. Governments are fully embracing them, and it's a huge signal of the shift that's underway. Stablecoins are essentially bringing fiat currency onto the blockchain, which is a game changer. We're in the middle of a digital currency revolution. The key is to focus on projects with the most real world utility. Personally, I'm keeping a close eye on some great utility projects, and I've outlined a few of them already. Soon, these networks won't just be worth billions, they'll be worth trillions. This is bigger than anything we've ever seen before. And here's the exciting part. It's not going to take 20 years to happen. As Franklin Templeton mentioned, this shift is moving way faster than most people realize because the big players are already here. We're already seeing tokenization ramping up, and JP Morgan meeting with the crypto task force is a big deal. It's a clear sign of what's happening behind the scenes. The move to public blockchains has started, and things are only going to speed up from here. I hope you enjoyed the video. If you did, don't forget to like, subscribe, and turn on notifications so you don't miss any of the free content coming your way. Thanks so much for watching, and I'll see you next time. Take care.